Hello, everyone. And as always, a very, very warm welcome. Thank you for making the time to join us today. I, on behalf of the panel and the Andy team, would like to start off by setting the context a little, right? So why did we choose to discuss innovative finance and the role that they have to play in the SGB ecosystem? Give me a second while I share screen. Right. So as you can see, this is the typical landscape of businesses or business financing in emerging economies, right? So you've got the bottom section that microfinance addresses, and then you've got the bank's primary target. But this large portion in between that's looking to finance small and medium enterprises, right? Which has a very, very strong overlap with SGBs, which is where we find a huge finance gap, right? And we have seen and believe that innovative finance mechanisms can actually go a long way in helping to bridge this gap. And how do they do that, right? So when we say innovative finance, what are we talking about, right? So it's kind of all of these elements here: results-based finance, blended finance, impact investing, at the intersection of which you have impact-linked finance, right? But basically, what these are innovative finance mechanisms that combine public, private, and philanthropic capital, and we believe can strengthen efforts to support underserved communities by promoting the efficient use of very scarce resources, right? And that's why we felt it was a relevant topic for us to discuss here. So with those few words, Nirjor, I hand this over to you to introduce our fabulous panel and to take things ahead.
Excellent. Thank you so much, Sucharita, and the Andy team, and I'll say everybody in the audience for joining. My name is Nirjor. I'm the CEO of Bangladesh Angels. We're very proud to be one of the organizing partners of this conclave. And what's exciting is I think, we have in the room, obviously interventions and kind of voices working across the continent. So really excited about the discussion. So we'll quickly kind of do a round of introductions. So I'll just kind of go ask my fellow panelists. So Ashu, maybe you could first start with yourself, just who you are, what your organization does, and we'll go to the others as well.
Thank you, Nirjor. My name is Ashutosh Tiwari. You can all call me Ashu. That's how people sneeze. And I was sneezing a few moments ago because I'm in a very cold part of Nepal, which is Pokhara, actually, in the mid-hills of Nepal. But anyway, I run a company called Safal Partners. Safal Partners is Nepal's first operations-focused investment firm. We do small-scale investments. I say operations-focused because, most SMEs and SGBs that we work with need operational support, operational help, in addition to the capital that we provide to them. So that's what we do. And I've been running this for the last 5 years, and we have a growing team and work across Nepal. Thank you, Nirjor. Over to you.
Thank you so much for joining from beautiful Pokhara. Good to have you. I'll just keep going. Natasha, what about yourself? Where are you, your organization, where are you calling from today?
Hi, Nirjor. Thank you all so much for having me, and thank you for everyone who's tuned into the session. I'm Natasha Garcha. I'm the Senior Director at the Impact Investment Exchange. We're headquartered in Singapore. We work across the world, but being based in Southeast Asia, we have a large footprint in both South and Southeast Asia. I think we're very excited to be talking about innovative finance. I'm actually part of the innovative finance team and the Gender Lens Investment Specialist, especially in terms of structuring securities and new financial mechanisms that can tap into private sector capital more effectively to address the gap that we just discussed right before this. That's really what we do. We have a big focus on gender equality, being a woman-led and woman-owned firm. Very excited to talk more about that part in the session. Thank you again for having me.
Thank you so much, Natasha. Maxime, a little bit earlier, I'm guessing in the time for you, but thanks for joining, and maybe if you can give us an introduction.
Sure, happy to be here. Hi, everyone. I'm Maxime, and I'm the lead of Impact Intelligence and Education at Roots of Impact. which is a manager of catalytic capital that aim at creating incentives, aligning it with financials support to support the scaling of impact enterprises. We're based in Germany, but we operate globally. And in the past almost 3 years now, we've been operating also a large program called Bineo Brady, which I'm very happy to share a little bit more in the session today. Yeah, happy to be here.
Excellent. Thanks, Maxime. And not last but not least, Gayatri, welcome. And maybe if you could give us an introduction.
Thanks so much, Nidhar. Good morning, everyone. A pleasure to be here. I'm Gayatri Suri, and I'm a part of the social finance team at UBS Optimus Foundation. And just very briefly, the foundation is linked to the global wealth manager UBS, and we receive the majority of funds from UBS, our staff, as well as UBS clients. Traditionally, we fund programs across and businesses that help the most vulnerable around the world in 4 sectors. So it's health, education, environment, and child protection. And central to the foundation's support is shifting to funding based on results. So what Sucharita was earlier mentioning, that we fund based on impact achieved rather than on inputs and activities. And we also acknowledge that, each social problem may have a different solution, and therefore use a wide range of tools to achieve social and environmental impact. So right from grant making to results-based funding, such as development impact bonds, as well as investment into impact enterprises. And I'm a part of the social finance team where we, mainly focus on 3 areas. So one is where we build an impact-focused ecosystem so that we can, look at more results-based funding. Secondly, we invest in impact-focused businesses. And the third is that we, work collaboratively with partners on sort of leveraging more private sector capital into the sector to solve for, social problems. And thank you for having me, and look forward to the discussion today.
No worries. And I think all 3 are areas that we want to kind of deep dive into as part of this conversation. So thank you so much for kind of helping us set that context. We'd love to hear from you as well, audience. We'd love to learn more about who you are, and hopefully try to steer the conversation towards topics that you care about. I understand the ND team has a poll for us. So we'd love to learn more about who you are. And while we're doing that, while you're doing the poll, maybe you could also in the chat just type in who you are, where you're calling from. It's always good to hear from you. Maybe we'll give this a few seconds for the poll.
Yeah, Nidhar, just a heads up, the poll is on. We have 70% responses. I'll just showcase the results once a few more responses come in.
Perfect. Chat's disabled, no worries.
Nidhar, do you see the results on your screen?
Yes, we do. So 40%, a plurality, is the ESOs, impact investors in the room as well, entrepreneurs, the rest, and a big other. So maybe during the Q&A portion, we'll hear from some of these others as well. But thank you guys so much, and let's go ahead and get started if that is okay.
Sure, please do, Nidhar. I'll get the context setting slide up, but we can kick things off with you asking the panelists to speak.
Excellent. So the first part of the conversation, we wanted to kind of go a little bit deeper into some of the specific and most relevant interventions of each organization, particularly as relates to this panel. So first, we'll start with Ashu and Safal Partners. Ashu, maybe you could talk us through some of these activities you're doing, particularly with Nepal VC Association as well as DOMA.
Sure. Thank you, Nidhar. So basically, let me give you a larger context. That is, I'm going to talk exclusively about Nepal because right now we do not work outside of Nepal. So let me give you the market scenario here. Nepal has something like 950,000 registered MSMEs. These are micro, small, and medium businesses, and of them, 80% are MSMEs. These are micro, home-based type of businesses, very small, family-run usually. They could be tea shops, they could be little garment shop or what have you, all across Nepal. And 12% are SMEs, and then 8% are medium and large companies. So right now, at the moment, there is a financing gap of $3.6 billion for these SMEs and MSMEs. Large companies can put up land as collateral and use other means of collateral to get money from banks. But there's a big financing gap, and the available capital is very little, actually. In fact, something like $200 million. So 3.6 billion is the need, and 200 million is availability. So there's a big gap, obviously. And in the last 7 years, 8 years, a lot of private equity, venture capital firms have come into the place, but their focus is more on picking winners, in the sense that companies that are already doing well, they pick those up and then fund them even more. So those companies that are small, that show potential, and that could be scaled up, they do not get capital very easily. There are many hurdles, policy hurdles, and so forth. So at the moment, land as collateral has excluded a lot of small businesses and growing businesses from accessing capital, and that's been a real problem. And World Bank and IFC and other big agencies, they're working with the government, with the central bank, to allow movable assets such as machineries, inventory, whatever you, to be used as collateral for bank loans. And that's a very slow process, because people understand land very well, but then women-owned businesses, entrepreneurs, and small businesses do not necessarily have land. And besides, in South Asia, as you all know, land is owned, it's joint family property. There are many issues, family issues related to land, and nobody allows their son or daughter, entrepreneurial son or daughter, to go out and put up family land for collateral. So a lot of social issues as well, and that again excludes a lot of people from accessing capital. Recently, what is happening now is, we're again, World Bank and IFC are working with the central bank. They're using this special metrics called, psychometric scoring solution, which is basically a kind of a toolkit, if you will, to assess how risky a person is, how in terms of business decisions, business management, and all that. And they do some sort of scoring, and on the basis of that, they say this person is eligible for a loan up to this amount. And banks are slowly warming up to this idea. Though again, it's a very small, very risky process, and it's going very slowly at the moment. So basically, coming back to Sabal Partners, 5 years ago, I saw the need for angel investment. I saw that many people were buying, were getting into real estate or stock market, or putting money in a fixed deposit in a bank, because commercial banks here pay a very high interest on fixed deposit, something like 9 to 12% actually. So let your money work for you that way, rather than investing in entrepreneurs and in a very high risk ventures and so forth. That was the attitude. That is still the attitude. So right now, with Sabal Partners, what we've done is we've actually done a lot of investors education. We've run workshops for them, study groups for them, and basically telling them that this is the money you can afford to lose. Not that we will lose it for you, but you can afford to lose, and your money will go a long way toward helping these entrepreneurs, these small businesses, to scale up, to buy the machinery, to access more funds down the road, and so forth. That again, I was amazed at the level of investor education that we had to do. Myself and my team members had to do was something that I hadn't thought of before. But there's a lot of education component to what we do, and we do that pretty much every other month in Kathmandu, meeting with a lot of investors, because again, real estate, stock market, fixed deposit, these are our competitors, and these are major competitors in terms of investment space. And angel investment is not formally recognized by the government. Government understands big infrastructure financing. Government understands people meaning foreign investors putting money into state-run companies and so forth, but it doesn't really understand small-scale investment done by local people, and even for that matter by foreign investors. Like up to last year, the foreign investment, the limit was something like $500,000. So if somebody from Singapore wanted to invest in a business in Nepal, that person had to put up something like $500,000 right off the bat, and that was too high a barrier for many Nepali entrepreneurs to access foreign investment. Right, this year they've lowered that to $200,000. But even then, our estimate is that most SMEs in Nepal need something like $10,000, $25,000. They don't need $200,000, $500,000, and because of that barrier, many are excluded from accessing good financing from overseas investors. So that was the problem. That is still a problem. Again, a big financing gap. At Safal Partners, what we do is like we have a pool of around 200 investors. These are small scale investors, but high net worth individuals. And we've told them, put your big money elsewhere in stock market, in fixed deposit, and so forth. Give us a little bit of money, and we make sure that we put your money to good use, working with entrepreneurs in the manufacturing sector, tech sector, service sector, and so forth. And we give them a regular updates. Like every other month, we send out an email saying, this is how these entrepreneurs are doing. And if you have questions, come talk to us. So a lot of investors communications that we do, and also a lot of coaching, mentoring, and advising for entrepreneurs. So basically, we are not set up as a PE VC firm. We are more like investment / advising, mentoring sort of a firm that also helps with a lot of operations work for the entrepreneurs. So right now in Nepal, there is a great interest in incubation accelerators because big PE and VC firms that are active in Nepal, like Dolma and others, they I think have already picked out the winners in the sense that companies that are doing well have been funded and so forth. Now everybody needs a pipeline, and where do these small companies come from? So in Nepal, we've had not so good experience with incubators and accelerators because they are very costly, and public money is not available, and private money runs out very quickly for this sort of public good, social good sort of activities. So right now in November, we are actually a part of a team that is organizing a 2-day workshop on incubation and accelerators, and we hope to have a dialogue with policymakers saying perhaps public money could come into the incubation space, acceleration space, and that money will fund the running of the incubation accelerators, and more pipeline could be created, and pipeline not only in tech but also in agri, tourism, and manufacturing, and so forth. So that's an ongoing discussion. But I think to give you the summary of this, to say that I would like to say that incubations haven't really worked very well because they run out of funding very quickly, and as a result, most funding agencies really alternative funding agencies really struggle with for finding the right entrepreneurs, right businesses, and so forth. So access to capital is a big problem here. Also, there is no money for product development, for tech, or for manufacturing, and so forth. Sales and marketing, a lot of entrepreneurs need advice. We do that. There could be more Safal Partners in Nepal, for example, helping with small businesses all across the country. That hasn't happened, though we are now training other people to be local advisors, local mentors, and so forth. So we need more of that talent pool who are ecosystem builders, if you will. So that work is going on. And from Safal, we've experimented with a range of activities. Last year, 3 years ago, I think my colleague Santwana, she basically sort of worked with around 200 women entrepreneurs, basically helping them launch their business, and also for those who didn't want to run their own businesses, helping them with jobs and so forth. So putting at-risk women in the economic workforce, that was one work we did. And right now we are working in far western Nepal, in the Karnali province, which is as beautiful as Bhutan, maybe even more beautiful. I'm talking about the country of Bhutan, a lot of great mountains and all that, very, very pristine and, extremely harsh terrain and so forth. We are working with the MSMEs there, and together working with Dolma. Dolma is another investment firm, a bigger investment firm. So basically we are now in the earlier concept of this idea, which goes something like this. That is, we want to now create a fund that we call a pre-banking fund. Pre-banking fund would be something like, we raise something like, let's say $20-30 million from institutional investors and put them to work for MSMEs. These MSMEs will not necessarily give us equity because they are too primitive for that, but we work with them for 3 years, and we give them some amount of money as loans, and we basically build good habits in terms of the MSMEs paying back the loans, so that they build up a track record, they build up paperwork, they are much more formal than they were before. And after 3 years, perhaps regular banks, commercial banks can come in and lend them more money, and because they are bankable now, they are kosher, so to speak, after 3 years of working with us. And our money is the MSMEs will start paying us, develop a track record, build up credit rating number, and so forth. And that way, that is one way we can bring a lot of MSMEs into the formal fold. So that's what we're working with Dolma. Our work is still ongoing, a lot of issues there, regulatory hurdles and all that, because we want to introduce something like venture debt, which is new in Nepal. So again, a lot of working with the regulators, interacting with the regulators, saying, it is something that is applicable for a small scale MSMEs and so forth. So the work is going on. Again, just to summarize now, huge financing gap. And we could use more social partners in Nepal and to work with entrepreneurs and also with investors and so forth. There is a growing interest. However, how do we accelerate that? It's one thing we're considering, and perhaps networking with all of you from Singapore, from India, from Bangladesh, Pakistan, and so forth. We can do this work even more in the coming times. I'll stop here, Niraj.
No worries, Ashu. Thank you so much for that. And a few things kind of stand out. Obviously, we've had a lot of conversations around the similarities around our own ecosystems and trying to do investor education, kind of creating that market for it. Another interesting point you make, curious what the audience thinks, the idea of incubation and even acceleration maybe as a public good, and can you truly monetize that? I mean, that might be an interesting question for the Q&A, but for now we'll end it there. Thanks a lot, Ashu. We'll now go to Natasha. Natasha, we've obviously heard about green bonds. Tell us more about orange bonds and women's livelihood bonds.
Absolutely. Thank you, Nijor, and thank you, Ashutosh. That's very interesting, and congratulations on all the work you're doing in Nepal. Maybe I'll give you just a quick context on what IX does, and that'll be a good segue into the Women's Livelihood Bond series and how we built that up into the Orange Bond initiative as a bigger asset class. So IEX was started during the 2008 financial crisis, and I think the big focus at that time was, of course, how do you make finance more inclusive, more democratized? And I think women have been excluded from the financial systems for centuries. So it was very important, of course, for gender equality to be a big part of the sustainable finance movement. IEX being our founder, Professor Doreen Shanaz, who was both on Wall Street and in firms such as Grameen, and it's really the objective of IEX and the mission is to connect the Wall Streets of the world with the back streets of underserved communities and make sure that we're connecting the way capital flows to be more inclusive, with a big focus not just on gender equality, but also recognizing that women don't always have to be positioned as victims of poverty, of COVID, of climate change, but can be solutions to many of these issues. So a lot of the work that we do is also very focused on building green supply chains, building resilient communities as well. We just happen to take a very strong gender lens because we believe half of humanity should be a part of these solutions. IEX does many different things, so I won't go into all of them, but we have a big focus on mobilizing capital through from very early stage capital to take SMEs across the investment process. Being a part of the innovative finance team, my big focus is on debt capital. So I'll touch on that for today's session, just so that we're not too broad. In 2017, by that time, and Nijor, you're absolutely right, green bonds were already well known to the market, but you never had anything called a social bond. Social bond principles were issued by the International Capital Markets Association in 2017, right around the time we issued our first social bond, even though that asset class per se didn't exist. The way we did it is we recognized there was a gap between the supply of finance and the demand for finance. And I think this is very much building on what Ashutosh said. You may have interested investors, you may have a big need for finance, but if you don't have the right kind of financial mechanisms that can get around regulatory barriers or types of investor interest being matched with what kind of capital is needed, and having a very strong focus on what kind of outcomes need to be achieved. And I think I'm sure Gayatri is going to talk a lot more about this. How do you shift from that focus to just funding activities and outputs to actually funding outcomes? I think it makes it very important to have the right financial mechanism to do that. And that's really at the heart of the innovative finance team at IEX. So when we wanted to design our first gender bond or social bond, we decided that we would focus on women's livelihoods. And we thought that was a very important way to integrate women into supply chains and to have them build their economic resilience if they were building gender equality in a way that focused on their empowerment. So the Women's Livelihood Bond 1 was the first gender bond in the world to be listed on a stock exchange. We were very proud. The green bond movement was really shaped and defined by mostly banks, mostly out of Europe, global north. So we're very proud that this bond came out of the global south and being the first of its kind. And it's a testament to the strength and resilience of the global south, repeatedly shows in being innovative and embracing all the excellent opportunities. We are not just emerging markets and high growth markets. We also have this tremendous opportunity to push the sustainable finance space forward. So the first Women's Livelihood Bond used a very innovative structure. We had a multi-country, multi-sector approach of the portfolio. That was a way to balance risk, return, and impact. We were diversifying risk by having a number of different countries. We invest in India, Sri Lanka, Cambodia, Indonesia, Philippines, Vietnam. And that helps not only customize the way we're approaching the investment process, but also diversify the risk. Within each country, we have a multi-sector approach. In certain countries, microfinance may be more relevant. In others, we find clean energy and sustainable agriculture more relevant when it comes to women's livelihood. And gender equality in women's livelihood was just the common denominator across anyone who we selected for the portfolio. Even within the structure, we had an innovative approach of having a subordinated debt layer, which is where we would channel in capital from, say, more philanthropic organizations or government organizations. We've had the Rockefeller Foundation buy that portion. We've had the United States DFC buy that. That's the donor agency of the US government, the Korean KOICA, and Taiwanese ICDF. And that's where you have all these actors who can be taking more risk, take that more risky piece. And for every dollar they put in, 9 times more capital comes from the private sector. And that's what we're really trying to get at. How do you unlock trillion-dollar asset managers to buy these securities? How do you make sure family offices, high net worth individuals, all these different groups who have capital, who have many of them never have played, and even in the ESG space, let alone a full sustainable debt product, but having the right kind of mechanism that de-risks it for them and also has a very strong, clear focus on what the impact outcomes should be, is the way we wanted to approach it. The bond, has been very successful. The first bond matured last year, fully redeemed, no defaults. And I think it's a testament to the power of gender equality. Everyone always thought having a big focus on women could be your Achilles heel, but really we've seen, these kind of securities are a wonderful way to mitigate risk. When you think about gender equality, and this will lead into why we decided orange bonds should be its own asset class. If you think about it from a peace and equality perspective, we're all talking about the Ukraine war. And to be fair, we should be talking about all the other wars happening in Asia and the Middle East with equal focus. We see that when a nation has greater gender equality, they're less prone to conflict. Gender equality is a greater predictor of peace than democracy or the religious faith of the predominant population. We also see if women are part of peace agreements, they have a 35% chance of lasting more than 50 years. We see that the companies who have women and at the forefront of their leadership have a 30% chance of outperforming all peers. We also see that even when we talk about climate change, more and more women are growing our food. 2/3 of the world's food is grown by female smallholder farmers. And if you cut them out of climate adaptation, we are going to have food security issues as well. And this is very, very important in Asia. So in many different ways, we see women not as victims of these issues, but as solutions to them. And that's why we think it makes very, very good business sense. So coming to the Orange Bond Initiative, orange is the color of SDG 5. This United Nations has 17 Sustainable Development Goals. SDG 5 is focused on gender equality and is orange in color, very similar to how SDG 13 is green in color, therefore the green bonds. Orange bonds takes its color from SDG 5. And I think what's very powerful about this is to have an asset class that is purely focused on gender equality is a very powerful way to say that this is something mainstream and this is something that can actually push the boundaries. We're also, as I said, very proud that this is an asset class which is being really designed by a group of steering committee members who come from across different regions, having presence of the global south from the get-go, not as an afterthought, as we've seen in many of these other asset classes, is very critical. What is the biggest issue we see in the green and social bond market these days is everybody talks about the greenwashing and the impact washing. And it does happen. And I can tell you this, IX has been on the advisory council for a number of years. We lead the impact reporting working group. We have to have greater transparency around the outcomes we're trying to achieve. And we cannot do that if we don't have not just the way the proceeds are used, but who's designing these issuances. For instance, if you have a gender bond and there are no women on your team, or if your bond, whether it's green or social or gender, focuses on South Asia, why wouldn't you have people from that region in the team designing it, who have cultural relativism, who can bring those understandings of what problems you're trying to solve? For instance, if you're investing in Nepal, having Ashutos's team as a part of that to give inputs is so critical. And finally, on the reporting side, making sure that you also have the voices of these people are reflected in the reporting. The custom right now in the market is to have a third party who will give you an opinion to say, yes, you comply. What we think is much more powerful is to leverage data and technology to make sure that at the last mile, you are verifying your results with the people whose lives you're trying to transform. So with the Orange Bond Initiative, one of the key principles we're focusing on is more transparent reporting, where women and girls are part of that reporting and investment decision-making process as well. So the Orange Bond Initiative, in summary, is its own asset class. It's new, it's very democratized. We do have organizations from across the world on the steering committee. Besides IEX, we also have water.org, which is a nonprofit. We have the United Nations Capital Development Fund. We have the Australian and US government donor agencies. We have a bank, we have a law firm, and we have one of the largest investors in the world. So there's different groups who are bringing into the thinking of this. But at the heart of it, we are very focused on seeing how do you actually also go beyond just standard setting, and how do you make sure you're actually pushing forward transactions that matter. So a big focus of the Orange Bond Initiative will be by 2030 to unlock at least $10 billion to these gender-focused issuances, harmonize them, because we do think just because you're orange doesn't mean you can't also be green or social. In fact, we think there's a lot of synergies with all three. And finally, making sure that you have women and girls as a part of the investment decision-making process. So it's much more transparent and democratized. So we're very excited. IEX's next bond, the Women's Aviate Bond 5, which will be issued in Q4 of this year, will be the pilot orange bond. And so we're very honored to be doing that, but we have a number of other transactions that will hopefully come out in the market shortly after. So I think it's very important not just to set these standards, which is very easy to do, but also to hold yourselves accountable to it and put out capital that's mobilized in line with them. I'll stop there, but thank you again for having me as a part of the panel.
Yeah, thank you so much, Natasha. I think a few things kind of stick out to me. So one is obviously the various ecosystem, various kind of stakeholders you have to manage, and aligning those incentive structures, which obviously can get quite complicated, and in these types of, I guess, instruments. Second is the importance of these outcomes and how do you define them. And I know Maxime has worked with me also on quite a bit of that, and looking forward to hearing more from her. And the last is also just the mechanics matter, right? How portfolio construction, team construction, how you kind of go about it. Quite important in terms of making these things work. So thank you so much, Natasha, and definitely we'll come back to you on the Q&A. Maxime, we'd love to hear from you now about Roots of Impact, the various types of programs it's running, including in Bangladesh, and particularly this idea of TA as a form of catalytic capital.
Yeah, thanks, Nishal. Sorry, my voice is still a little bit funny because I just recovered from COVID, but I hope you all could hear and understand me well. So yeah, it's been a pleasure to have been running a program called Bineo Bridi in Bangladesh since the onset of the pandemic back in 2020, where we are aiming at, it's basically an impact investing ecosystem building program where we're trying to address both the supply and demand side. What we mean by that is that in the program, apart from providing catalytic capital, where we use two specific types of impact-linked financing instruments, which I can talk a little bit more in a bit, and we also provide capacity building support on two very specific topics that we see as essential. And I think also Natasha also highlighted the importance about measuring impact, be able to talk about it instead of just understanding whether there is impact or not. How can you really create a direct linkage to financial incentives? The only way to do it is that you're able to compare it. How efficient are you in terms of producing impact? And so in Bineo Bridi, apart from the catalytic funding that we're providing, we also provide capacity building support to not only the entrepreneurs, but also to local ecosystem builder, because we believe this is the way that it will only be sustainable for the ecosystem to grow on two topics, which is investment readiness and impact measurement and management. And so the reason why we think we provide these two is because these are definitely the core and foundational topic for impact investing to take place. And also, even if there is catalytic capital available, which often is very rare also to begin with, you also need the impact entrepreneurs to be ready to receive, to have the capacity to receive these capital. And therefore, in this sense, also TA as a catalytic capital, you can understand, what do we mean by catalytic capital is that, well, it enable or they help mobilize further capital. And so if you think about TA, which is very much about also de-risking the project execution risk in the future by making sure that the impact entrepreneur are better prepared at an earlier stage, this is a way of understanding TA also, how can it facilitate further capital to be invested in these enterprises. And I think it's also a very interesting time right now because I think some of the investors, VCs I've been talking to, they told me, yeah, now it's about portfolio management, not so much about expanding anymore. And I think this is also a very good time to highlight the function of TA as a catalytic capital when it comes to supporting SGBs, and in our case, particularly impact entrepreneurs. Moving on to the catalytic capital, I think it's quite interesting because I've been hearing also from the fellow panelists to talk about outcome instead of input and activity focus kind of investment activities. And I think that's quite interesting because that's also what social impact incentives, which is one of the instruments that we've been deploying in Bangladesh and have been closing some transactions in the past few years, focus on, which is what we're trying to do is to reward the impact creator, which is the entrepreneur, based on the impact performance that they're able to deliver across a period of time. I think what is interesting here is that, very often catalytic capital or also it's natural for investors to think, you know what, I want to provide the function of catalytic capital is also to de-risk, right? It's quite common. But then what we're trying to achieve with Sync and also in some of our later impact-linked finance fund, for example, there's Gender and FinTech Inclusive Fund that we're launching next week. What we're also trying to do is to enhance the reward in both impact and financial terms. And so in the Sync scenario, basically what we're really trying to do is to make sure that we're able to track and to see what is the impact performance of the impact enterprise at different measurement period that when we work with them. And so they get the financial reward that is directly linked to the impact performance at that particular period of time. So this is Sync, which we have been piloting actually quite a lot now globally. But then there is another type of impact-linked finance instrument that we've been launching in Bangladesh that I find quite interesting, also to dovetail to the concept of TA as a catalytic capital, which is called the Impact Ready Matching Fund. Because what we see is that, for a Sync transaction to take place, actually the requirement in terms of impact measurement is quite high on the impact entrepreneur side. Not necessarily that they need to measure like a ton of things, but the clarity that they need to have through the kind of data that they collect and how they collect the data is quite important. And often what we're trying to do is also to find impact matrix that align that reflect not only the impact performance, but also align with the commercial performance. Nevertheless, a lot of the impact entrepreneur on the ground, I think they do need some support in terms of basic impact measurement support. And so with Impact Ready Matching Fund, basically we're creating incentives. It's a matching fund concept, but then still create incentives for them to start implementing impact measurement and management best practices. For example, coming up with a theory of change, identifying the impact matrix, but also very important is to establish a system that allow them to consistently and sustainably measure these impact matrix as the company grow, and to make sure that impact is embedded in the business model. Having implemented this type of instrument in the past few years, I think it reinforces the understanding that, well, how can we really use capital, not only in terms of finance, but also to understand TA as has a mobilizing effect, not only in terms of, yes, there is, like in the case of IRMF, there is finance being provided on the table, but at the same time, it's really to build the capacity of these companies in the long run so that they're more able to receive impact investment in the long term. So that's what I meant by TA as a form of catalytic capital. What I would like to also highlight is that because we've been doing some research also about investor perception as well during this period of time, trying to understand how would investors perceive catalytic capital, how can we mobilize it further, so on and so forth. And so very often is that, you know, catalytic capital or investors, they tend to think that, well, I would prefer to put it in a fund. And I do believe I'm additional already because simply by putting money in the fund, even though the terms is at commercial terms, I'm already being additional because I have this cornerstone function that draw other investors in. And I think that's also what is interesting with what we're trying to do also with the IRF GIF, the Gender Inclusive FinTech Fund, which is, yes, we can still manage it in a fund, enable lowering of transaction costs, but how can we make sure that apart from the function of de-risking, how can we make sure that this is also done in a way that would enhance the outcome? Yeah, with that, I think I would hand it back to Nishore, and we can maybe dive deeper in case of any questions.
Excellent. Thank you so much, Maxime. And thank you for being a trooper as well. Glad you're recovering, and thank you so much for that. I will just kind of then go to our last panelists, and then before we go into the Q&A, Gayatri, this, a continuous theme from the last few speakers is about kind of stakeholder management and bringing different stakeholders together for a particular transaction. Would love to hear, case studies from your side.
Thanks, Nishore. And I think that we've heard a lot about focusing on outcomes, and also Maxime was mentioning that there is a need for standardization of impact metrics. I think at UBS Optimus we have sort of looked at both those examples, but I think today I would want to talk about how UBS Optimus Foundation is also supporting social businesses through equity investments. So like I had mentioned earlier, at UBS Optimus we acknowledge that each social problem is different. And that's why I use it, range of different tools, right from grant making to, impact loans as well as equity investments. And so, the example that I would like to touch upon today is of Kido, which is a social business focused on providing quality early learning to children in affordable private schools in India. And we have supported, Kido over the last couple of years to sort of help them capacity build and also provide quality early learning in India. And through the social finance team, we not only support the ecosystem building activities, but we also support individual organizations. So here, it's sort of like a two-step process that we've done, where we first worked with an organization called FSG Pipe, where it was a program to improve private early education in India. It supported, it ran for a period of 5 years and supported around 9 service providers in the ECE market to actually develop quality solutions, raise demand and awareness of quality learning, both at the parent level, at the teacher level, and at the student level, and sort of work with these, providers to improve the, supply as well as the demand. And here, we've seen that in India, there has been an improvement in access to education, but quality of learning outcomes is still far behind. Less than 50% of students, have basic literacy and numeracy skills. We've also seen that, around 70% of, low income and middle income parents send their children to affordable private schools. So it is a large section of the population that is going to these schools. But however, most of them lack these quality early learning, mechanisms. Most of the learning is based on rote memorization, so it's not developmentally appropriate. And we've also seen that, majority or 80% of the learning happens below the age of 6. So that's why, we at UBS Optimus wanted to, we realized that there was a need in the sector and there was high impact. And that's how we supported FSG Pipe to help, these, get these service providers, investment ready, capacity build them, educate the sector. So that's what we did over a period of I would say 4 to 5 years, from 2015 to 2019. And as a result of that, capacity building, we saw that these service providers were performing much better than the traditional affordable private schools in India. So we saw that the learning outcomes were somewhere to around 40 to 50% more improved. There was a value proposition. Most of these models were sustainable, they were revenue generating, and hence didn't require philanthropic or government capital support. And then sort of like a next step to that, we saw that, Kido was doing, great work with these affordable private schools. We saw that the learning was, 40% more than, most of the providers. And then that's how we started supporting them in 2019. And there as well, I think depending upon, the nature of the organization and the stage that they are at. So first we supported them, through a grant investment in 2019. And we saw, we worked with them to sort of help them get more investment ready over the last 2 years. And that's when we, supported them with an equity investment in 2021 and then a follow-on very recently in 2022. So that's sort of been a journey of how, we at UBS Optimus look at the whole sector as well as individual organizations and how we can, support them through different tools as well as pools of capital, as well as, looking at how do you get different, how do you make the market and, because that is very important to get other funders, to get other actors into the ecosystem. So I think would like to conclude and sort of emphasize that, we focus on building the larger ecosystem to crowd in additional private capital. And I think I had mentioned earlier that, our sort of focus going forward is that we want to support individual businesses, individual, organizations, but also the sector to get more, capital, to get more outcome focused capital into the sector and, foster those long-term relationships.
Excellent. Thank you so much, Gayatri. And I really appreciate the overview and particularly, as we mentioned, I think crowding in outside capital and second outcomes. I think two key themes we'll continue to explore as part of the Q&A. So I think we'll now go towards the Q&A. Thank you so much, audience members, and also panelists for answering the questions so far on the Q&A. I'll try to address those and also kind of weave in some of our own questions. I think we've got, according to the organizers, I think we've got some overrun time, maybe up to 10-15 minutes as well, if based on the discussion. But I'll go into a few of the comments that came in already during the panel. So one is this issue of impact and metrics, and particularly in your particular interventions, going back to outcomes. Are there one or two, there's so many things you can measure, but do you end up kind of focusing on a particular set of metrics, one or two metrics? We'd love to hear more from the panelists about, what are those North Stars that define the success of your respective programs that you talked about?
I'm happy to start. I think what we do is we take a three-pronged approach to deciding what to measure. And I think first and foremost, if our overall objective is gender equality, and there are many pathways to do that, we're looking both at a portfolio of companies. So what does this mean at the portfolio level? How does each bond drive gender equality? And then within each enterprise, being in a different country, in a different sector, there are different things that are relevant for them to measure. So what we typically do is we would have a set of consistent metrics, and we would of course start with the outputs. For instance, if we have a certain group of clean energy companies or sustainable ag and financial inclusion, what are some of the common denominators that each of them should measure? But then we'll quickly transition that to outcome. If we're looking at economic empowerment as a primary outcome, are women increasing income? Are they improving financial resilience because they have better insurance or better savings level? Do they have better market access at fair pricing and in decent working conditions? And how do you actually not just measure the number of women, but actually whether they are actually improving on each of these levels? And how do you quantify that? That becomes very important for us. Are you able to quantify what that actually means? So we try to calculate what's called a social return on investment. For every dollar going in, what's the expected ripple effect of social value you can create and track across the bond life? We then do also take a zoom out into what does this actually mean for gender equality more broadly and all the other aspects that we think women are driving forward on the secondary level. How does this advance climate action? Because women are now part of that green workforce. How does this advance community resilience? A lot of the women who were more likely to drop out of the workforce, women are 1.8 times more likely to drop out of the workforce in light of COVID. How do they actually build resilient communities because they have access to water and sanitation, for instance? So some of those outcomes as well. And then tying it to things like the UN SDGs. What is this? We actually have a mapping for each of these indicators. Which SDG does this link to? So investors who, for all of us, I'm sure we're all thinking about how do you translate this into something an investor can care about or language that they understand, mandates that they have. So that's how we do that. On one side is the SDG tracking for output and outcome. And then also how do you zoom out and align with some of the big market standards like the orange bond or the green bond standards as well. Again, because it's very important for us to measure things that matter to the enterprise and things that they're focused on, but then translate that into a language that investors can make decisions based on. So that's how we do the mapping.
Thank you, Natasha. Maxime, Gayatri, does that resonate with you in terms of your particular topics that you talked about, whether it's educational access or access to finance for women?
I think from our perspective, very often in our transaction, the impact matrix is tailored. As I mentioned earlier, what we're trying to do is also to find matrix that align both the impact and commercial performance. Because ultimately it's going to be a business. If there's no business, there's no impact. What I would like to highlight though here is that, I think it's very easy and common to ask the question or to hope to find an answer, which is where is the standardized impact matrix that we can just use for all our transaction. But then what I would suggest here, instead of trying to find the standardized impact matrix, of course, like increase in income often is very, very often used. But then there is these 5 fundamentals from the impact management project that I always find very helpful to create clarity in terms of the impact that you would like to create. Because very often, for example, when we think about, oh, maybe creating employment, I'm creating impact, or, oh, I'm helping people to increase their income, then I'm already creating impact. But then very often the question is, who are you creating this impact for? This is often quite defining. For example, when you talk about, gender inclusion, of course, then you're targeting a woman, but then still, like, can you be more specified? Which type of woman are you trying to work with? Like, is it going to be women in rural areas, or is it women of a specific tribe that is traditionally being excluded from the economy, for example? And being more specific, asking the question of who, what are you trying to create? How much? This usually is quite a good framework that I think is helpful for everyone, regardless of the industry that you're in, to clarify the impact that you're creating. And then, of course, then there is also this part about, okay, how can we also find a sweet spot to find an impact matrix that aligns with the commercial performance? Maybe I'll just try to give some examples here with some of the previous transactions that we've done, being that, for example, we have been working with a company that provide finance to farmers, but there's also a fintech element to it. So instead of just also trying to measure increase in income of the farmer, which obviously also tells you about, how much business that is being generated for this startup, we were trying to also push a little bit further, which is, the reason why we're trying to increase income or to support these farmers is also to improve the resilience of these farmers in the long term, so that economically they are also going to be more resilient, regardless whether maybe there will be at some point like a climate change incident that will affect them, so on and so forth. So instead of just focusing also in terms of increasing income, what we're trying to look into is also, oh, how many of these farmers reinvest the money into further capital that allow them to do farming in a more professional and sustainable manner. So, if you think about this matrix, it's not only about just impact, it's also like aligning it with, okay, from the business perspective, what does it really mean? And to push it further, actually, in a lot of the transaction structuring process, what we have been discussing with the impact entrepreneur is also to think about, of course, different donors or funders, they tend to ask for different things, and it's like exhausting to measure impact. But if you really are able to think about using the impact data as a way to steer your strategy and growth and steer, you know what, where is the opportunity? Where am I creating the most additionality? Additionality meaning that, well, something that did not exist if your intervention were not present, then it becomes much more meaningful for you as an impact entrepreneur to practice. And it's also easier for you to use this to discuss with potential investors, because it shows them also, you know, why do they have to care about this? And what does it really mean for your organization to grow based on these data and intelligence? So I will stop it here.
No worries. Who, what, how, and also about additionality. Gayatri, do those things resonate?
Thanks, Nijol, and thanks, Maxime and Natasha. I think a lot of the points resonate on, in terms of, how we look at impacts. I would say it's definitely a mix of, we definitely have our thematic strategy. So we do look at portfolio level indicators, and like how Natasha was mentioning, trying to map out how the different organizations, that there should be some standardization of metrics, and sort of looking at it at a more portfolio level, and then linking it to the international standards, maybe the IMP or the UN SDGs. Because I think that's a great way to sort of communicate impact to investors as well. On the other hand, that when there are transactions such as, more results-based financing instruments that Maxime was talking about, and, such as development impact bonds or impact loans, we've seen that the approach is more tailored, and that's more like, having a conversation with the different parties and sort of trying to, get to these outcomes or these impact metrics that are sort of accurate, but not too rigorous or not too time-consuming, because we also want to create more replicable structures that can be, utilized going forward and scaled. So I think that's the approach that we take, either in the DIBs, where we are trying to, make the metrics more standardized and more replicable, as well as on the impact loan side, we've like how Maxime was mentioning, it is necessary for the business to be a viable business, and then that's, how they can also generate more impact. So an example here that, comes to my mind is of Jacaranda Maternity, which is an affordable, low-cost healthcare chain in Kenya. And one of the, the metrics that we've looked at over there is the patient satisfaction score. So for us, it's important that, the ultimate patients are, realizing that they are getting better quality of care, they are happy with the care, and that's how, the organization will be able to increase their, revenues and sustain. But, the impact is very linked into the business model, because they are an affordable, a low-cost clinic chain in Kenya. So that's something, we've always, I think the kind of, whenever we look at models, the idea is that impact as well as the sustainability go hand in hand, because, we can't have one without the other.
Makes a lot of sense. And go ahead, Ashu.
I just wanted to add a little bit. Basically, we do not have an extensive list of impact indicators, so we just have a few, and I'll go through them. One is income. Has it gone up or not after our intervention? That is very important. And the second is, employment numbers, because like we have pitched our SMEs to investors saying that, your money will help raise employment in this particular area of Nepal and so forth. So employment numbers are very important. We also have qualitative indicators such as market linkages, how many more customers they have, and also process improvement, which leads to lower cost of production or cost of service and so forth. So these are some qualitative. They may have some numbers, but numbers are sort of like, guesstimates, if you will, estimates. That's where we are. However, at the moment, we're working with 60 MSMEs, agri-MSMEs in Far Western Nepal. These MSMEs were affected by COVID, and a funding agency came forward saying, we would like to give grants to these MSMEs. Could you help us select them, find them, and also fund them so that they can buy business services, they can be more competitive. So right now we are working with them, and our focus is on lowering the cost of production, finding the new customers for them, and also helping them with bargaining, negotiation skills. So impact measures are at a very crude early stage in Nepal, but we are learning from what you guys are doing in Singapore and elsewhere, making sure that we are at least on the right side of impact measurement, even though some of our metrics are still sort of like in the crude stage as we're collecting more data, information, both quantitative and qualitative. Just wanted to put that in. Thank you, Nijol.
Yeah, no worries. And I think it speaks to the at least to be the metrics you mentioned kind of speaks to the additionality point very much so. And staying with you, Ashu, so, I think we could have an entire webinar itself on impact and outcomes, but but that's what happens post-finance, right? I'm also curious about the mechanics pre-finance. You talked about kind of, the fact that you do these monthly updates to investors. You also mentioned that, how hard it is to kind of scale, what you're doing, and you wish there were more Safal partners in a country like Nepal. Feel the same way about Bangladesh and others as well. Just curious, on the due diligence and kind of pipeline development side, how do you, on one hand, try to, because also, in the absence of collateral, due diligence is very much the source of security for investors. But how do you do it in such a way that it's not too high touch, and you also try to reduce transaction costs for both parties? Curious for you, and then would love to hear from the rest of the panel as well.
Absolutely, absolutely. I mean, I guess we have a bunch of around, 90, 95 questions that we have prepared. And these questions cover everything from, finances to the entrepreneur's educational background, social background, what have you, basically. And we try to do as much, collect as much information as possible. But at the end of the day, it boils down to judgment, really. In the sense that, these entrepreneurs are eager, they're enthusiastic, they're untested. We look at the market size and all that. But sometimes, sometimes the entrepreneurs, they evince certain qualities. They have the drive, they have the focus. We do not have to necessarily like them because, sometimes likability, that becomes a trap in and of itself. So we try to, I try to involve other members of my team in the sense that, we get a kind of a, wisdom of the crowd, as you were, in terms of judgment. So it basically, at the end of the day, it's a judgment play based on a lot of variables, most of which are qualitative at that stage because they do not have a lot of things on paper. So it's a little bit of a frontier market or even a pre-frontier market, as you were. It seems to have worked with us partly because, we haven't taken many risks. We do not have 40 invested companies, so to speak. We have like around 5 and growing. So our sort of like approach is cautious, though with the funding agency or with the fund, we can certainly scale that up. And we invest an enormous amount of time just working with entrepreneurs. We offer them, 3-4 things actually that we call GSM plus N, which is, governance. So they have a board, they have a way of making decisions that aligns with the strategy. We also put in systems. S stands for systems, basically, HR systems, reporting systems, accounting systems, and all that. And mentoring. Mentoring is like weekly calls or weekly face-to-face meetings for half an hour to 45 minutes, saying, what are you working on? Is that the priority? What does the result look like? Do you need help? Who can you call on for additional help? So on and so forth. So that, there's a constant sort of, movement toward results or milestones that we have agreed on, so to speak. And the fourth one is N, network. Network is also entrepreneurs, market players, and so forth. So GSM plus N is what we offer to entrepreneurs. Again, so because we meet them on a regular basis, we have a very high frequency interaction. Chances of our finding out surprises or difficulties are high, so to speak, but sometimes, some things do fall through the crack. We are mindful of that. So it's a kind of, experimental, though we try to make it as scientific as possible. We realize that, at the end of the day, it's a judgment game. And we are always asking ourselves, could we go wrong on this particular venture? If so, what would be some of the, some of the red flags and all that? So we are skeptical of our own investment in the sense that, maybe, I don't know, we saw something else that wasn't there or something like that. So being skeptical also helps to be on the right track and also work well with the entrepreneurs because they also know that, we like them, but not that much, but we want them to succeed, because we're putting somebody else's money into their game. So it's a little bit of, experimental, little bit of tentative, but it seems to be working so far. Would love to scale it up even more when other foundations, family foundations and private foundations come into the game and help us take this to the next level. Nijor?
Excellent. Thank you so much. Maxime, I know you and I worked together quite a bit on the pipeline for the Binyag Vriddhi program. So we'd love to just also hear from you about kind of how you've standardized the process, and particularly maybe, tying in with, one, the role of ecosystem actors and kind of, in that process. And second, this was a question that came up in the Q&A. I'm sure there's a lot of companies that have applied for the funding. It may not be appropriate for them. So maybe could you give us also, what makes them appropriate or not appropriate for such companies?
Oh, okay. Maybe I'll start with the second question first. And then the first question is about how we work with local ecosystem players. Did I understand correctly?
Yes.
Cool. So the second question, what exactly are we looking for? So I think that's a very interesting question. Usually for social impact incentives, the kind of company that we're looking for are at a growth stage, and they're looking to raise, enter a fundraising round in the next 6 to 12 months, so to speak, and looking to raise around, I would say, from 500K to $2 million US, for example. So that's more on the commercial side or the stage like of development of the company that we are using this particular type of financing instruments for. On the impact side, I think is what is very important and what we often see lacking is also that do you have you been collecting information about your past performance on both commercial and impact side? Because without that, we're not able to establish the baseline that is required for us to understand and identify additionality, which is, how much further can we push you to do apart from just delivering average performance? So that's often something that is missing. What we also come across quite a lot is that, enterprises do measure a lot of things already. Like, for example, your usual commercial KPI, and then you're trying to track how many people you're reaching, who are you reaching. But then sometimes it's not like, maybe you do have the data, but then you haven't quite put the thought into how to triangulate certain data to allow you to have a better grasp of the different dimension of your impact. So that's something that is often also took a while to figure out with the impact entrepreneur. So regardless, I think it's always good to, pick, let's say, to start small, like to pick 1 or 2 or maximum 3 impact metrics that you would like to use to convey your, for example, theory of change, to support what you have been trying to claim that this is what you're trying to deliver, and then slowly grow into it. So that would be the kind of enterprises that we're looking to support. As for impact ready matching fund, we target at slightly earlier stage companies that are that kind of just finished product market fit, but they're looking to grow further. Maybe looking to raise another round of seed funding, for example, up to 500K, for example. And those companies that we're targeting at are entrepreneurs that impact entrepreneurs or impact enterprises that have an impact angle, but do not necessarily have an established impact measurement and management system in place yet. So these are the 2 types of companies that we are looking for with these 2 types of instruments. That being said, I also want to mention that SYNC and IRMF are only some of the examples from the spectrum of impact-linked financing instruments that we're going to deploy also in some of our other programs and impact-linked fund. So I think there's always, it depends on really what we're trying to do is to see what is the need of the ecosystem or of the particular segment and sector, and then what would be the reasonable type of financing instruments to use with the goal to really enhance the return in terms of impact performance. When it comes to working with local ecosystem player, I think it's been quite a journey in Bangladesh to work with, for example, Nishor from Bangladesh Angels, and then also Better Stories. I think they're also in the room today, really to push them a little bit in our training, as in, what are the relevant questions that you can ask your impact entrepreneurs apart from just who and what and how much? How can you push them to depict and capture the impact in a more precise and concise way? I think that has been quite a long journey. But again, I think the 5 fundamentals that I've mentioned earlier is always quite helpful. Asking the question of who is, it often helps you to set yourself apart or to distinguish the kind of impact that you're trying to create, as opposed to what we can always just claim easily by, like, let's say, creating employment or increase in income of some of the beneficiaries. So yeah, so I think that's a lot of the experience from the trainer program, which allow us to understand, well, that's the fundamental part of the impact measurement and management that we could help facilitate for the local ecosystem player to take up and to support the local impact entrepreneurs. At the same time, in order to prepare for example, sync transaction, as I mentioned earlier, there would be also a slightly higher requirement in terms of impact measurement and management, which we also have a new kind of capacity building kind of program directly for the impact entrepreneur to help prepare these enterprises to receive a sync, for example, which is called the Impact Linked Finance Readiness Bootcamp that we have launched in some of our other funds in the educational sector and coming up in the WASH, and also the GIF, which is a gender inclusive and fintech fund.
Excellent. Thank you, Maxime. I know we've got a few minutes left, but I'd love to go back to Natasha and Gayatri and just maybe answer one of the questions that came up as well. You operate across geographies. I'm sure you get proposals to invest across geographies. What are some, we talked about specific companies, I guess, or investment opportunities, but what are some things that you keep in mind when it comes to, let's say, expanding across geographies or taking your intervention and investments into new countries?
I think with my team, we benefit that IX is a larger organization. So we have a research unit, which does a lot of work. So before we go into a country, typically the research team would have done an extensive amount of work in that country with different local partners. And we emphasize that a lot. Having that local presence is very critical before we go in and make any sort of investments in a country or guide people that we know or investors that we know to make those investments. So the research team is very critical for us. We also have, I would say, the other side of this that is, and I think someone earlier in the panel just touched on this, is the importance of educating the ecosystem, educating our group of investors to go into a new country. So say we're going into a country like Kenya, making sure that our investors are aware of what that even means is very critical. So I feel like the pressure always comes on the entrepreneurs in the country to prove themselves, whereas I actually think pressure should also be on the investors to understand the ecosystem and the opportunity. So we have an institute that does a lot of training sessions as well. What does it even mean to say invest in an SDG focused bond or an orange bond is equally important. And what does that mean in the context of a new country? And then finally, while we're designing the investment decisions, tapping into our measurement team, which has a digital impact assessment platform. So we can send surveys to the populations where we're trying to design the innovative financial solution to better understand whether the companies we're investing in are truly creating a transformative impact is important for us, even before we put them into any sort of portfolio. Hearing from, say, in our case, the women who they say that they're impacting and which communities they're targeting is critical as well. So for us, honestly, my team is able to do what it does because we have the research, the training, and then the measurement unit all working in cohesion. And then we design an investment solution in a much more informed way. Thank you.
Excellent. Thank you. Gayatri?
Thanks, Natasha, and thanks, Nishor. I think here at UBS Optimus, we definitely, are a smaller team. But I think what we've, what we've done traditionally as well is that, we have a global sort of team that houses experts, and these are thematic experts and our program directors. So what we've seen is that, we've been more strategic in our approach of, how do you look at different sectors, what is the need in the sector, and what are those high impact models. So for example, in Kenya, where we've seen that, or in South Africa, where there is a large unemployment problem. So we recently, partnered with Janssen, which is on the Future of Work Fund, to actually increase access to student financing through income share agreements. So I think we, tend to have these, thematic experts and thematic strategies that then we look at different regions and see where is the highest need. So for example, in India, it could be, working more, on the education side, whereas in Southeast Asia, it could also be working more on the environment side, because, traditionally that's where they house a lot of the natural assets or biodiversity assets. So I think that's sort of what we do within the team. We do have local, presence. So I'm based out of India, so I think it's more regional in that sense, but, work very closely with global colleagues. And I think to a point that Natasha mentioned on sort of educating the ecosystem. So, within the social finance team, that's sort of one of the, very important focus areas that we have is to, support different networks and different, I would say organizations in actually educating the market on, the importance of outcomes-based funding, the importance of, supporting different regions. And then that's how we also, take our clients, the funding comes from UPS clients. So sort of taking them on these journeys through collectives. So collectives are where, we work with our clients, sort of educate them on, what are the different opportunities available in the different regions, and then, also give them an insight into how these models work. So I think that's pretty important for us as well to sort of, get that communication out, and that then, links to the third vertical that we have, which is basically leveraging more, in capital for, impact. And I think that's pretty important, for us.
Thank you so much. I think we've scratched the surface in terms of so many of these topics that we could go into, and I'm sure the Andy team we'll try to work together on kind of crystallizing some of these learnings. But in the meantime, to the panelists, thank you so much for joining. Maxime, you're recovering from COVID. Really appreciate it. Hope you're doing better. And everybody also in the room, I think most people stayed even though we're over time. So I really appreciate that as well. And let's keep the conversation going. Let's get more capital into SGBs. Let's get more geographies, into these frameworks and platforms. And let's do more work together. I think that's the call to action for today. But otherwise, wish you a great rest of the conference. And thank you so much for joining us for this panel. Thank you, everyone, so much.
Thank you. Bye-bye.
Thank you.
Thank you.
Everyone. Yeah.
Thank you.